Today is Monday, December the 14th, and Zach pointed out a couple of things, CVS and Dollar General in the comments. So we're going to go back and we're going to look at those. But here is the McClellan oscillator, which has now gone below the neutral line and is heading towards the oversold line, which means we should be seeing some down movement in the market. Now, a couple of people that I follow Jim Cramer. I don't watch Jim Cramer. I don't take leads from Jim Cramer. But his charitable fund is taking money off the table. I just read the headlines, no more than that. But there's someone else that I follow on Twitter whose name escapes me right now, and I really should know. But anyways, he said that he is net short, big time right now. So got to listen to that. I'm going to try to find his name for us, and we will hopefully be able to. Doug Cass. Love him or hate him. I like the guy. He gets badly maligned. He writes on Real Money. I like his tweets. He is net short, big time, he's saying. So let's listen to that. Anyway, here's the SPX. SPX finished below the 8. Remember back here we said we could be heading for a rendezvous with the cloud. Well, I believe that we are. So today the Chiku span was way above this candle, but tomorrow the Chiku span is going to be looking at this candle for support. So take a close look at that and let's highlight that. Let's come back and look at the Chiku span tomorrow night and see what happened. The Dow Jones was down slightly. The NASDAQ retreated from its highs but bounced a little bit. Apple down 55, but still above the cloud. The Chiku span is still fine. I'm still feeling good about my short 115 puts, which have been vacillating all over the place. But I'm pretty confident I'm going to be holding on to those until I can see 60 to 70% return in my premium. NIO is very interesting. Look at where NIO is on this long Fibonacci. We've had a pullback to where 61.8%. And I know that we had that bad news today because on Friday they released some more stock, and then over the weekend it became known that they were going to sell that stock for $39. So naturally the stock dropped down today to a low of $39.43, but quickly bounced up again. But now let's take a look at the 5-minute chart, and using the Fibonacci's from the prior day, pretty narrow range, but we had this gap down, which we haven't closed yet, by the way, but that gap came down to the big 61.8% that we showed on the Fibonacci, but came to find support at 161.8% negative on the extension down, and then came up and hit its high, which was the low of the day before. So the day before's Fibonacci's are what you need to be looking for. We should be looking tomorrow for that gap fill. So let's take our motive wave gap tool and let's just do it in between here and the open, which was right here. But let's take it at the top of that wick. And that's the gap that we're going to try to see, hopefully get filled tomorrow or Wednesday. Caterpillar down to $1.24. Remember this shark pattern? We're going to stop talking about that pretty soon because it really just has finished that long shark pattern all the way back from January at the beginning of the year. So a whole year, this stock has been trading technically and has completed that gap pattern. We now should really see a down A, an up B, and a down C, and then we should be able to see another type of Gartley pattern forming. Home Depot up $1.03, but still not looking like an exciting stock, held below the 8. AT&T has done some decent pulling back since its big high. Still great stock, like it. Don't care where it goes for the short term, just like the 7% dividend. And if it goes down to 26, I'm just going to buy more. The banks were down today. Now let's go and take a look at some of the new stocks that we were looking at. Let's look at CVS. Well, we said, Zach said today that CVS filled that, something about filling a gap. This gap here was filled a while ago. Zach, I'm not sure which gap you meant. Let's take a look at your comment here. CVS trying to fill the gap that I mentioned. My last video was on Thursday, and there may be a gap in the hourly chart perhaps, but anyhow, CVS still looks like it's not a stock to buy. If it's going to fill this pattern, which didn't quite satisfy the butterfly requirements, but came awfully close to it before falling down to this 88.6 zone region, which would be a butterfly final leg. And now it should be heading to 80 and 92. And remember, it's CVS and Walgreens that are in charge of administering the doses to these senior citizens' homes. So it's not going to attract people into the stores if that's the case. So I'm not sure what kind of a bump that's going to be for them. The stock that Zach wanted us to look at was Dollar General. Now I looked at Dollar General. He was talking about a Fibonacci. I was looking at this Fibonacci, which was this low, which had 1, 2, 3 touches and really formed a good base in here, and then took off and used the 200 as support 1, 2, 3, 4 times, 5 times, then failed. Now what we have is we had this pullback to 50%. Now we've moved back up over the 100%, and we haven't reached the 138.2. Maybe we're 127. Let's see if we can't get to put in the 127.2. And let's see if that's anywhere close. Well, maybe. But we didn't hit the 138. So Dollar General, I'm not sure what kind of a stock this is. Let's take a look at the 1 hour. And this is the area that Zach was talking about. So he's looking at this high here, October the 16th, to this low here of October the 30th. And he's drawn this Fibonacci to see if the next wave of Dollar General is going to be to fulfill a retrace of this down. It made 78.6, pulled back. It did hit the 100, and then it pulled back. And now it's didn't quite pull back to a meaningful point. There could be a low Fibonacci down here. But where is it now? It's right back down to this 0 again. So Zach might be saying, are we going to see this move again after having seen it once? This pullback, then 78.6. Once the stock gets above 78.6, it usually makes its way back to 100. If it can't, then it's in for tests all the way down, which it did quite cleanly, showing the 61.8, the 50, and the 38.2 are really good Fibonacci. So now it's gone down, it's made this low. So he's making a pretty decent point here that you want to watch Dollar General, and you would want to be buying it above 2742, and you might want to do that with options. So that's all for today. I promise I'll get a video out to you tomorrow, because we've got to be looking at the market in the short term, the McClellan oscillator, and the resistance at the 8 EMA tells us that the S&P could be going down. And if there's no COVID relief bill passed by Congress, you can expect that to happen.